What's up, my people? How we doing today? Welcome back to the channel. It's your boy D. It's D's Daily Due Diligence, right? Welcome back. All right, I do have some DD that I want to present to you guys, right? Today we're going to talk about some DD for like the overall market, and it's about securities lending. And in my opinion, guys, this is why the squeeze hasn't happened quite yet, right? I do believe it will happen, but it just hasn't happened quite yet, right? But the chips are there and the plays there, the numbers there, the data's there, everything's there, right, for the play in order for this to happen. Okay. And remember, I'm not a financial advisor. This is not financial advice, right? So don't take it as that. Take it for educational and entertainment purposes only, right? So yeah, thank you to all my subscribers, guys. I appreciate each and every one of y'all, right? And today I'm just gonna jump right into it. And but before I do, right, one thing is that AMC Life, right? Hashtag AMC Life. What I meant by that, remember, I'm sticking to it, guys. If you're about this life, right, about you're waiting for the squeeze, guys, then that's what AMC life is, to me at least. And we're about the DD, we're about the patience, and that's what's gonna pay us, right, is the patience. And we gotta just be aware and notice what's really going on. And yeah, that's what I got. So first off, like, we're gonna jump into it, right? Let's switch it up. And I'm going to just go over some charts, right? So a little bit of AMC chart and then Lucid chart. And then we're going to jump into the main DD that I want to talk about, right? So hope y'all are having a good day. Because to me, guys, right, like AMC is in a crazy spot right now, right? The reason the short sellers keep on shorting is because they're greedy. And I will tell you right now that their goal is to get AMC to $0, right? So that they can make a huge profit. And I learned this, and this is based off what I'm going to talk about here in the DD, okay? But they're still making a profit, right? And between the brokers and the hedge funds and all that, they've been making money as this has gone on. And they always get the information first before retail does, okay? So I'll explain that in a little bit here on the chart. But today was not bad. I mean, it was pretty choppy, but you had a little run up over here, right? And then a massive sell off, which to me is just shorting, okay? Because remember, they're trying to keep this down as much as they can, and their goal is to get to zero eventually, right? That's their goal. Okay, so this is a 2-minute chart. The reason I say this is because look at the pass right here, right? It got rejected here, came back down, and then now it's moving its way back up, and it's above the line here. Okay. Now I'm going to zoom out to the daily chart because this is the one I really care about. And again, like with this volume right now, 24 million volume for the day, guys, we're not going to see anything crazy, right? Until we start seeing a big volume candle come in. I'm talking about, this size, like something like this, right? In order to start going to the upside. But this is what I'm paying attention to. This is what I like about the chart, guys. We already came off these support lines, right? And we got another bounce, all right? You see this here? That's a bounce. Now this is I believe what's called a doji candle. It's a small one. It could be a bullish indicator, right? But it could also go down, guys. This is a weird, just important time. Something could happen here, right? But in my opinion, guys, like what's really going to cause the squeeze is a major event, right? And that's what we're all waiting on, right? Because we thought it was going to be, the whole market crashing, and nothing has really happened yet, right? And then we thought it was going to be the Russia news and the war and all that, and nothing has happened yet, right? So in order to like make this happen, something major has to happen. A couple things can happen, right? Or the people who are lending the shares, if they have to recall their shares, right? Or a margin call, like things like that, right? So I really like where the chart is sitting right now, guys. This could be a good, strong move to the upside, right? Like there could be some big because to me, like I always say, it's like a coil that is getting, compressed, and then eventually it gets too much pressure, and it's gonna, hopefully explode to the upside. All right, after all this downside, but with the low volume, it's not gonna do much. All right, let's go over the options chain here. So again, we were able to get a few more calls in the money today for AMC, but not that many. The next goal would be to see like 17, right? Because there's about 9,000 there. 18, you have 13,000, and at 20, you have 15,000, right? So that would really help us, because I'm pretty sure the hedge funds at this point, what's today, Wednesday? I don't think, they have a hedged for those 20 and up. So that would be good for us. As far as the puts down here, they already got the major, so at 19, that would be like where I would consider them losing right for this week if we were able to move past 19 by Friday. All right. This is what's interesting again. It looks like they're running out of shares again, right? In the past few days when it hit zero, and then all of a sudden like 1.7 popped up, 1.7 million. Now it's back down to 450,000. You have 6,000, like I said, a few more went in the money. And this is what you have to keep in mind. Okay, look, remember that the short percentage of the total volume every day. That's why the price of AMC is not really the price of AMC, guys. Is because of all the shorting, right? So when there's like 66%, 68%, that's interesting. Yesterday it was only 48%, huh? That's, in my opinion, that's because they're running out of shares. We'll see. And also, you know, we're still waiting on the transparency. See what that's still a proposal. It's not in effect, in my opinion, right now because nothing has really happened, right? All right, let's go over the Lucid chart here real quick because it is looking pretty good again. It's showing some strength, guys. It's currently in this uptrend here. Watch that it's following here. Watch from here to here, right? So even though it dipped below it, I would still consider it an uptrend. And why is that, right? In my opinion, that's because of the stuff that's going on with the gas prices, the oil, the sanctions, all that stuff is actually affecting EVs, right, in a positive way. That's why you start to see this rally here, and you got to bounce already off those, all right? And this was right here's where it lost it. This was where it was support, and then it became resistance, but it tested it once, came back under and was able to break it, and now it's going to move. So I'm still bullish on it. If this follows this trend, we're gonna make it right back to 27, right? If things kind of keep going the way they're going, right? Because now people are starting to realize the potential, and the more that time goes on, you know, because of the growth space that the range that's there, where this price could go to, compared to Tesla, right? Where Tesla's a huge just beast now, and always has been, right? So yeah, that's what I do like about the chart, because like I said, it's been pretty comfortable in these at these prices too. So let's wait and see what happens. All right, guys. Not a lot of volume either. So volume was super low, about 18 million. Normal average right now has been 41 million. So that's good to see, right? You saw some strength in the chart with low volume. Okay. Now I'm gonna move on to this DD because I feel like it's the most important thing right now. And what we're gonna look at is these are the brokers, right? So a broker right here, you got Fidelity, TD Ameritrade, E-Trade. These are the top 10, right? And these guys are the ones who are making money, a lot of money on AMC, guys. Okay. Interactive Brokers, Merrill Lynch, right? Right here, you even got Webull, Robinhood, Vanguard, and SoFi, and it ranks them too. Okay, but just so you understand who the brokers are, right? Now I'm gonna jump into this. Of course, AMC is a short squeeze play, and this is why I think it hasn't happened yet. Okay, but the data is there. Okay, we should all know by now what a short squeeze is, right? So a short squeeze and what it entails. Here's just some takeaways, right? Short selling occurs when an investor borrows a security and sells it on the open market, planning to buy it back for less money. Or in the short sellers of AMC, guys, I'm telling you, they're trying to get it to go to zero. Short sellers bet on and profit from a drop in a security's price. This can be contrasted with long investors who want the price to go up. And why can't they get the price to go to zero? Because of the apes, right? Because we're still holding. Short selling has a high risk over reward ratio. It can offer big profits, but losses can amount quickly and infinite due to margin calls, okay? So that's what we're saying, like share recalls, margin calls, and event. That's what's going to cause the squeeze, in my opinion, right? So they borrow shares usually from a broker dealer. So who are they borrowing them from? From all the lists that I just gave you, hoping to buy them back for a profit if the price declines. Shares must be borrowed because you cannot sell shares that do not exist. Right? Keep that in mind. To close a short position, because that's a whole nother world. But a trader buys the shares back on the market, hopefully at a price less than what they borrowed the asset, and returns them to the lender broker. Traders must account for any interest charged by the broker or commissions charged on trades. To open a short position, a trader must have a margin account, right? So that's why, like a lot of retail people, I doubt that a lot of retail people are shorting AMC, right? Because you have to have a margin account. And you will usually have to pay interest on the value of the borrowed shares while the position is open. Also, FINRA, which enforces the rules and regulations governing registered brokers and broker-dealer firms in the United States and the New York Stock Exchange and the Federal Reserve, have set minimum values for the amount that the margin account must maintain, known as the maintenance margin, right? So if shorter drops below that level, they have to put in money, right? They get a margin call. Then if they don't have the money, that's when they get in trouble. If they can't meet that margin call. And then if they don't meet it, the position might be sold by the broker, right? The process of locating shares can be borrowed and returning them at the end of the trade is handled behind the scenes by the broker. That's why, like as retail, we do not see all the things that go on, right? With most brokers, however, each broker will have qualifications the trading account must meet before they allow margin trading. We know why they're going to sell short, because they're going to try to, borrow something, and without a lot of, okay, this is what I mean, like with little initial capital required, right? So because they have been able to make money along the way, that little fee that they're paying, it doesn't matter to them, right? Because I guarantee you, like especially since November to now, I mean, they have made some profits, right? The shorts, because the price has gone down. Possibility of high profits, whatever. Leverage investments possible. Hedge against other holdings. Cons. Potentially unlimited losses. Margin account necessary. Margin interest incurred, and short squeezes, right? When it comes to to close a position, a short seller might have trouble finding enough shares to buy. If a lot of other traders are also shorting the stock, which AMC is currently like at 21% short interest, right? The last time I checked, is if the stock is thinly traded. Conversely, sellers can get caught in a short squeeze loop if the market or a particular stock starts to skyrocket. Let's go down. Beginning investors should generally avoid short selling if they are until they get more trading experience under their belts. That being said, short selling through ETFs is somewhat a safer strategy due to a lower risk of a short squeeze. And remember that AMC has a big part in IWM in that ETF, and so that's why they short it through there, right, as well, in my opinion, guys. Besides the previously mentioned risk of losing money on a trade from a stock price rising, short sellers has additional risk that investors should consider. Shorting uses borrowed money, wrong timing, right? If an event happens, a short squeeze, but there has to be a demand for the shares that attracts more buyers, which pushes the stock price higher, causing even more short sellers to buy back to cover the positions, right? So it is a domino effect, right? If the price can move up fast enough. Regulatory risks, that's what we're waiting on as well. See what happens with those proposals right now. Going against the trend, there's cost to short selling, margin interest, the stock borrowing costs, dividends, and other payments. So the short seller is responsible for making dividend payments on the shorted stock to the entity from whom the stock has been borrowed. The short seller is also on the hook for making payments on account of other events associated with the shorted stock, such as share splits, spin-offs, and bonus share issues, all of which are unpredictable events, right? Let's go down. So during a bear market, why have they been shorting, right? Just real quick, I'll go to the daily chart. Why did this happen here, right? Because the short seller said, "Oh, we're gonna double down, we're gonna triple down," because they knew that the stocks were gonna start to go down before retail did, right? Like they always get the news first. They had a feeling, right, that something was gonna happen where the whole market was gonna go down. So in my opinion, that's why they held on. Let's see. And of course, and this did happen with AMC. It got the death cross, right? So that's how the technical indicators on the chart told them to go ahead and short. But right now is where they're at a high risk because they have profit, right? If they don't keep that profit and the price goes up because of something they weren't able to predict, right? That's where they get into trouble because they're greedy right now because they're like, whoa, well, we can get it under 10, right? But all of a sudden, if the price starts going up, they start losing their profit, right? There's some examples here. I don't want to go over every little thing, right? But because short sales are sold on margin, relatively small losses can lead to ever larger margin calls. If a squeeze call cannot be met, if a margin call cannot be met, the short must buy back their shares at an even higher price. This works to bid the price of the stock even higher, right? This is part of like where the huge numbers come from, right? Because it does say it's an infinity loss for them, right? A possible infinite loss for them, right? And that's where those 50K, 100K numbers all started from with AMC, all right? So they have to put up collateral, you know, which whether it's cash, securities, or a letter of credit. But this is what's crazy. So I did not know this. Hopefully, you know, this is something I could teach you today. But it says when a security is loaned, the title and the ownership are also transferred to the borrower. A loan fee, right, is charged to a brokerage to a client for borrowing shares along with the interest due related to the loan. The loan fee and the interest fee are charged pursuant to a securities lending agreement that must be completed before the stock is borrowed by a client. Holders of securities that are loaned receive a rebate from their brokerage. So this whole time, guys, like I said, since 72 till now, right, they have been shorting, and they turned it into a money-making business for them, right? Even though, you know, we have the data, and I believe the DD is right, and in order for the AMC squeeze to happen, the DD has to be right, right, for this, for us, for the apes. Because that's how the covering will happen, and that's what's going to skyrocket the price. But in the meantime, right, they're making money on the side with the rebates. And because they didn't have to put down a lot of money at first to do this, they kept doing it, right? Because they're in their head, they're making monies. But I did not know that the title, so who really owns these shares, right? Like if you come in as a retail investor and you bought the share, right, and they lent it out for you, who really owns it? That's the double lending thing, right? Because if that title is transferred to the person who is borrowing the share, right, you're just like a little placeholder right there. All right, you know, I just wanted to go back down here. This is also touching on the short selling, so I got to skip through some of this, but it says because this is the securities lending, right? This is securities lending. The other one was short selling, all right? So this is securities lending. And securities lending, it is important to short selling in which an investor borrows securities to immediately sell them. We already know that they want a profit, right? But the borrower is liable to pay any dividends out to the lender. That's why you hear these talks, you know, about AMC issuing its dividend, right? So we just know that it's the brokers who facilitate the transaction between the borrowing and lending parties. The borrower pays the fee to the lender for the shares, and this fee is split between the lending party and the clearing agent, right? So they're both making money there, guys. All right, guys. Yeah, that's all I got. I'm just gonna link these down below, of course. I believe this is something we need to consider and keep an eye on, right? This is how they're making money and why they've been avoiding to cover for so long. But this can't go on forever because, as we stated, the apes are here. And let me switch this back up so I can close this out, wrap this up for you guys. But yeah, guys, this game can't go on forever because, you know, they're paying money on the side. As long as we hold, we're good, guys. And we keep seeing the you know, the short interest rise. The utilization has been at 100% for like 21 days. I think I saw on Twitter today. That's a long time, guys, right? So I think we're close. Like I said, it's almost Christmas, guys, right? I know everyone wants to open their Christmas presents, but until the day comes, right, we just buy and hold. This is the way, and we know what to do. And AMC life, all right, guys? So later.